Heavily in the media at the moment is interest rates. Now, obviously they've been cut to historic lows over the last sort of 2 months, and we've now seen the property market increase over the last quarter, the first time since 2017. I think this is important because we saw this happen at the start of 2013 and 14 when interest rates were cut. We saw people starting to invest in properties. That increased property prices. What I feel is different at the moment is that in 2013 and 14, interest rates were a lot higher than what they were. And we're sort of at a point where banks are offering 2 to 3% interest rate to customers. Why I feel that's interesting is because you've got a lot of tenants paying rent to vendors who are getting a 2 or 3 or 4% rental return. So I think that what's going to shift is the buyers are actually going to become tenants, because provided they have a deposit, what they'll do is they'll start looking at purchasing a property instead of paying someone else's interest for them, and then what that will do will spur the market again. Secondly, you've got people who are in established properties with a little bit of equity in their home, and what they're doing is they're now looking at secondary options because cash in the bank is useless essentially, and now they're looking at purchasing rental properties as the next stable investment. So what they're doing is they're looking at what I call a blended return. So they're looking at the rental return plus potential capital growth for the year. So let's just say your rental return's 3% on your apartment or house, and your capital growth for the year is 3 to 4%. They're looking at a blended return for that year of approximately 6 to 7%. I think that will be interesting because with that in mind, the market will increase because people are now starting to look at their options.